You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 16th day of August, 2023. Thanks so much for joining us. Whoever you are, wherever you are, we're always glad to have you right here, right now. This is our second live broadcast of the day. We do 2 live broadcasts every trading day. First live broadcast is our live training room that runs from 9:30 a.m. to 11:30 a.m. Eastern. That broadcast, however, is reserved for members only and those who are taking their 1-week free trial. If you haven't taken your 1-week free trial, go to mytradingiq.com, and at the very top of the page, it says 5-day free trial. All you have to do is click that button, complete the registration form, and we'll get your desktop set up, your indicators indicating, and for 5 consecutive trading days, even if it stretches over a weekend, you'll have unfettered access to everything our lifetime members, our passport holders, have access to. There's no credit card required. In fact, it's just the opposite. We invest our time, energy, money, resources in you for 5 consecutive trading days, so that at the end of the trial, you're able to make a well-informed and intelligent decision as to whether or not trading is right for you. Now, when the live training room ends at 11:30 a.m. Eastern, we take a 30-minute break. Then we come back for this broadcast, which begins at 12 noon Eastern. There's a couple of, and this broadcast is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways you can join the afternoon broadcast live. Best way, go to mytradingiq.com and scroll down to where it says afternoon broadcast. Click the link, complete the 30-second registration form, and you're done. You only have to do that once. Going forward, what will happen is every trading day, about an hour before this broadcast starts, you'll get an email. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. Now, that's the best way because it gives you access to the question box so that you can ask questions and participate in the discussion. There will be days you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you'd like to join live, but you're busy doing live, but you still want to see what happened, what we talked about. Well, the same solution covers both situations. It's called our YouTube channel, and it's pretty easy to remember. youtube.com/CFRN. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there's over 2,000 300 daily live episodes archived for your educational and viewing pleasure. So if you're unable to join live today, well then of course you can check it out tonight. But thanks to YouTube, for those who are new to the world of CFRN, it's a great way to get to know who we really are. You can scroll back 6 weeks, 6 months, a year, 2 years, even more, and pick some days at random. You don't have to listen to the whole episode, but if you'll put in the time and the energy to do that, you'll really get to know who we are, not only as a training organization, but as a trading community. youtube.com/CFRN. Again, there's over 2,300 daily episodes archived just for you. We'll open with our daily devotional and a word of prayer, and then we'll talk about the title of today's broadcast. If you're tuned in via the YouTube channel, you already know the title, Fed Minutes Release and Why It Can Impact the Markets. We'll talk about that in a few minutes. And we're going to talk about Fitch and some of the banks that are about to get downgraded. We talked about the ones Moody downgraded last week. So, well, overall, doesn't look good. You know, they always said keeping money under your mattress wasn't a great idea. It just might be the best idea. Our scripture today is Joshua chapter 4, verses 20 through 24. And I'm going to share with you from the Message translation. The people came up out of the Jordan on the 10th day of the first month. They set up camp at Gilgal, the circle as it's known, to the east of Jericho. Joshua erected a monument at the Gilgal using the 12 stones that they had taken from the Jordan. And then he told the people of Israel, in the days to come, when your children ask their fathers, "What are these stones doing here?" tell your children this: Israel crossed over the Jordan on dry ground. Yes, God, your God, dried up the Jordan's waters for you until you had crossed, just as God, your God, did at the Red Sea, which had dried up before us until we had crossed. This was so that everybody on earth would recognize how strong God's rescuing hand is, and so that you would hold God in solemn reverence always. Again, that was Joshua 4, verses 20 through 24. And our topic this week is Good Lord. In other words, we serve a good God. We are forgetful people, and we know it. That's why we have calendars, apps, smartwatches, and virtual assistant devices in our homes. But even without modern technology, remembering is important. And that's what Joshua 4 is all about. In Joshua 4, God commanded his people to set up piles of stones to help them remember where they had come from. It had been a long road. They had been slaves in Egypt for about 400 years until God miraculously led them out of that place. Then they'd spend 40 more years wandering in the wilderness. But here in Joshua 4, by another miracle of God, they crossed the Jordan River into the land God had promised Abraham hundreds of years earlier. God's chosen people were experiencing His goodness like never before. And in that new season of life, they were likely to forget all about Him. So as they took those steps onto the other side into the promised land, God wanted them to set up a monument that would serve as a reminder of that crossing into the future. He wanted them to remember His goodness and to tell others about Him. In doing so, their children and many others would know to trust and follow God. The God of Israel is the same God we can know today. But we, like the Israelites, are prone to forget. God calls us to remember His goodness and tell that story to others. He wants us to give people a reason to ask, what is the meaning of these stones? What has God done for you? How would this memorial result in fear of the Lord? How can your story have the same result? What about God's goodness in the past? Is He calling you to remember to trust Him now? What are some ways that you can seek to actively remember God's goodness? I encourage you to recall God's goodness in your life and invite Him to help you see the opportunities He's giving you to testify about. Tell others about His goodness. Join me in a word of prayer. Heavenly Father, we gather before you today, reminded of the story of Joshua and the Israelites crossing the Jordan River. Just as they set up the 12 stones as a memorial to your faithfulness and power, we too want to set up a memorial of gratitude in our hearts. Lord, you are the one who parts the waters, who makes a way where there seems to be no way. Just as you guided the Israelites through the challenges they face, we ask for your guidance in our lives today. Help us to trust in your plan, even when we cannot see the way ahead. Like the Israelites, we have experienced your miraculous works in our lives. You have brought us through difficult times, providing for our needs, and shown us your unwavering love. We acknowledge that every good thing we have comes from your hand. May the memory of your faithfulness be etched in our hearts, reminding us that you are always with us. Help us to stand strong in our faith, knowing that you are the same yesterday, today, and forever. Just as Joshua instructed the Israelites to remember and share the story of your miraculous deeds, may we also share the testimonies of your goodness in our lives. Let our lives be a testament to your power and grace, so that others may come to know you and experience your love. Today, Lord, we dedicate ourselves anew to you. May we never forget the lessons of your word and the reminders of your faithfulness. Grant us the strength and courage to face the challenges that come our way, knowing that you are by our side. We thank you for your unfailing love, the ways you lead us, and for the promises you have given us. As we continue on our journey of faith, may we always remember and celebrate the wonders you have done. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen. Happy Wednesday. I hope it is a happy Wednesday for you, wherever you are, wherever you are. Let me give you the numbers from around the world. Start here in the U.S. with the cash markets. The indices, as they're called. Dow's down 9 points. The Nasdaq's down 92 points. S&P 500 is down 9.5. And the Russell 2000 is down 7.5. We have the Fed announcement coming up this afternoon at 2 p.m. Eastern. Not the Fed announcement, but the minutes from the last Fed announcement. Sometimes the release of the minutes can create as much volatility in the markets as the actual Fed announcement. Everyone's looking to hear what was said behind closed doors as the Fed made their decision a couple weeks ago. So as the markets get volatile at the announcement or at the release of the notes, best place to be is flat. Let the market digest whatever the minutes have to say and be patient. Wait for the market to resume its normal rhythm before getting back in the water. In the commodity basket, crude oil is down 20 cents, trading $80.79 last. Gold down $3.30, trading $19.31.90 last. Silver down 6 cents, trading $22.59 last. In the Asian markets at the close, the Nikkei fell 472 points, 1.5%. The Shanghai dropped 26 points, which is almost 1% for the Shanghai. The Hang Seng fell 251 points, which is almost 1.5%. In the European markets at the close, FTSE down 32, the DAX up 22, the CAC down 7.5. The DAX would be the only green on the screen. It was a red day in Asia, mixed day in the UK, only because of the DAX and those 22 points, which in the grand scheme of things isn't a lot, but green nonetheless. And here in the US of A, it is a red radio Wednesday. We're not deeply in the red. We got no movers or shakers, but we're red nonetheless. And so the markets will probably get sideways quiet as we approach the release of the minutes. And then when the minutes come out, we'll probably run up, we'll probably run down. When the dust settles, there's a good probability, based on history, we'll end up somewhere pretty close to where we were when the announcement came out, or the release came out. Now, I said we would talk about how the Fed minutes can impact the markets, and we will. But first, I want to share this with you. A Fitch ratings analyst warned that the U.S. banking industry has inched closer to another source of turbulence. The risk of sweeping rating downgrades on dozens of U.S. banks that could even include the likes of J.P. Morgan Chase. The ratings agency cut its assessment of the industry's health in June, a move that analyst Chris Wolf said went largely unnoticed because it didn't trigger downgrades on banks. But another one-notch downgrade of the industry score to A+ from AA- would force Fitch to reevaluate ratings on each of more than 70 U.S. banks it covers. Wolf told CNBC in an exclusive interview, if we were to move into an A+, then that would recalibrate all our financial measures and would probably translate into negative rating actions. credit rating firms relied upon by bond investors have roiled markets lately with their action. Last week, Moody's downgraded 10 small and mid-sized banks and warns that cuts could come for another 17 lenders, including larger institutions like Truist and U.S. Bank. Earlier this month, Fitch downgraded the U.S. long-term credit rating because of political dysfunction and growing debt loads, a move that was derided by business leaders, including J.P. Morgan CEO Jamie Dimon, the modern-day Willie Banks. And if you don't know who that is, you can go. So what happens when the Fed announcement comes out? The release of the minutes can have a significant impact on financial markets due to the insights they provide into the central bank's monetary policy decisions, discussions, and future plans. Here's a few ways that the Fed minutes impact the markets. Number one, it gives us clarity on the Fed's monetary policy. The minutes offer a detailed account of the discussions among the FOMC members regarding the current economic conditions, inflation, employment, and other factors influencing monetary policy. Traders and investors gain a clearer understanding of the central bank's outlook, which is not the same outlook that ordinary people see when they go to the grocery store, to the gas station, try to buy a house, or even rent an apartment. You know, there's the famous book, A Tale of Two Cities. We're living in a time right now of a tale of two realities. There's the reality they want us to see, but then we see the reality that we're living in. Number two, market expectations. Traders often compare the released minutes with their expectations and predictions. The minutes reveal a more hawkish or dovish tone than anticipated. Markets can experience significant movements. Hawkish means favoring tightening. Dovish means favoring looser policy. Number three, interest rate expectations. Markets closely monitor the Fed's stance on interest rates. Minutes that hint at potential interest rate hikes or cuts can lead to changes in market expectations. Interest rate decisions influence borrowing costs, consumer spending, and investment decisions. Number four, currency movements. The minutes can affect the currency markets. A more hawkish tone can lead to currency appreciation as investors anticipate higher interest rates. Conversely, a dovish tone can lead to currency depreciation. 5. Equity markets. Stocks can be impacted by the Fed's stance on interest rates and economic conditions. A more positive economic outlook might boost investor confidence, leading to stock market gains. Conversely, concerns about tightening policy might lead to volatility. 6. The bond markets. The bond market is particularly sensitive to the Fed statements. If the minutes suggest a more hawkish approach, indicating higher interest rates, bond prices may decline as yields rise, and that's going to be another nail in the coffin of all those banks that may potentially be downgraded in the coming days. Number 7, commodity markets can react to changes in the Fed's stance. For instance, a stronger dollar resulting from hawkish signals could lead to lower commodity prices. 8, the release of Fed minutes can increase market volatility, especially if the minutes reveal unexpected shifts in policy direction or economic outlook. Number 9, forward guidance. Markets analyze the Fed's forward guidance for insights into potential future policy actions. Clues about future rate hikes, quantitative easing measures, or changes in policy direction can significantly impact market sentiment. Number 10, changes in the Fed's communication can influence the yield curve. More hawkish signals might lead to a flattening of the yield curve, while dovish signals may lead to a steepening. 11, markets assess the perceived level of risk. A more dovish tone can boost risk sentiment, while a more hawkish stance might lead to risk aversion. And number 12, portfolio adjustments. Investors and institutions may adjust their portfolios based on the insights provided by the Fed minutes. This can involve reallocating assets to align with the central bank's anticipated policy shifts. Bottom line, the Fed minutes are scrutinized by market participants as they offer valuable insights into the central bank's thinking and potential future actions. Traders and investors use this information to adjust their strategies, positioning, and allocations across all asset classes. Best position at 2 p.m. Eastern is no position. Now this chart has proved true to form. We talked yesterday about taking out Friday's low would lead to further downside. We took out Friday's low. This is today's candle, Tuesday, where we pull back to the BBC. That's the green line, bull bear cross. We first started talking about what was coming back here when the step line crossed blue and climbing. As blue and climbing got above price, it became resistance because it was on its way to becoming red and falling. Now, we traded sideways for about a week. We had a drop. We pulled back one more time to the BBC, and you can see where we are today. I mentioned this morning in the discussion group, this level that we're at right now, before we got there, the low, July 11th. Next will be the low of July 10th. And we got a slightly lower low here on June 28th. And then that puts us at the 24% fib retracement. Fibs are drawn from the October 13th low of last year to the most recent swing high put in on July 27th. The reason we look at the daily chart first of whatever market we trade is because institutional traders look at daily, weekly, and monthly charts the way we look at 30-minute charts, 5-minute charts, tick charts, and range charts. So while we don't trade the daily chart, it clearly shows us what the deep pockets are doing. Institutions have accounts denominated in hundreds of millions, billions, and trillions of dollars. They trade price moves. The average retail trader has an account denominated in the thousands or tens of thousands of dollars. And when we trade, we don't move price. So our strategy and our indicators are designed not to beat the market, whatever that means, or outsmart the institutions with all of their resources, but to clearly see what the institutions are doing so that we can simply do the same thing just long enough to get our goal for the day, put the mouse away. So keep this area in mind here, about 44.15 is potential support. Then this area here, 43.98. And then at 43.67, we have the 24%. That's the shallowest possible fib retracement. And every institutional trader has these fibs on their daily chart. Fibs are not proprietary. They're based on 14th century math. And that math hasn't changed since the 14th century. You can see that we ran up and hit red and falling. Now, earlier in the week, we talked about the potential for the step line to cross red and falling, which would have the same effect as this had. This we knew would lead to lower prices. But you see what's happened? Red and falling is dropping. Price is dropping. We're well off the high of the session. As we traded up, we got rejected before we hit red and falling. And now we've not only taken out yesterday's low, but last Friday's low. We're at the low of July 11th. Next is the low of July 10th. Then the 24% fib retracement. And this is minor important here. Okay. When you've got price above the BBC, it stands for bull bear cross. Price is above the BBC, that's bullish. We anticipate higher prices. When price is below the BBC, that's bearish, and we anticipate lower prices on the daily chart and on the 30-minute chart. So far this week on Logic 247, that's our 24/7 around-the-clock E-mini alert service. Not just E-minis, but crude, gold, silver, euro, bonds, soybeans. We're in week 263 of Logic 247. Over those 263 weeks, we've issued over 14,900 individual handcrafted alerts. Now this recap is valid as of 7 a.m. this morning. Valerie will update it this afternoon. The numbers will change. There have been additional alerts that went out this morning. But at 7 a.m., we had a total of 34 alerts issued. One never triggered. We're still waiting on 7. So we had 26 actionable alerts, of which 4 or 15% would have been stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure and a simple process that we teach all of our passport holders in their unlimited one-on-one mentoring sessions. Now, the logic alerts usually have multiple targets. If your goal is to get out at the initial target, which is your goal for the day, put the mouse away, then your risk should be commensurate. From the entry of a logic alert to the final trade to target, which on a short trade will always be the weekly zone below, and on a long will be the weekly zone above, the maximum risk, even if there's $2,000 of potential profit in the alert, if you know you're going to get out at the initial target, then your risk should be commensurate with that. If you think there's a high probability price will get to the second target, third, or fourth, that's fine. But again, you shouldn't risk more than $300 per contract per trade, less when possible. And again, we teach you that if you're a passport holder in your unlimited one-on-one mentoring sessions. Over the last 263 weeks, we've averaged 20% or less of the alerts being stopped out. Yesterday we were sitting at 29%, and today we find ourselves at 15%. The logic alerts are based on current price action, and they come out around the clock because futures trade around the clock and we have traders around the globe. We also have our original alert service, concierge trade alerts. They're a little bit different. Number one, they're based on historic price action. And when historic price action meets current price action, that's where you'll find some of your best high probability, low risk trade opportunities. The CTAs work hand in hand with the Logic 247 alerts. The CTAs don't come out around the clock. They're published as a static report shortly after the Globex Open. So the Wednesday session began last night at 6 p.m. Eastern. The report was published at 6:20 p.m. Eastern. So all of our members and trial members had these numbers last night at 6:20. So what do you do with the report when it comes out? Number one, only worry about the markets you actually trade. Go to the 30-minute chart and make note of where price is at the time the report comes out. It will always be between these two numbers. Then draw a line in the sand at the long target, and then draw a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. Price gets above the 30-minute BBC. It's the green line that you saw on the daily chart. The indicators you'll see on my 30-minute charts are the exact same indicators that are on the daily chart. Price flows the same across all markets and all time frames. Price is above the 30-minute BBC, it's attempting to reach the long target. If price is below the 30-minute BBC, it's attempting to reach the short target. It's pretty simple. You look left to spot potential obstacles. On the logic alerts, I've already done that for you. With the CTAs, you look yourself. And over time, you'll learn how price behaves at a weekly trading zone. This is important to understand. Price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night at 6 p.m. Eastern till they close Friday afternoon at 5 p.m. Eastern. If price is above the 30-minute BBC, it's trying to reach the zone above. If price is below the 30-minute BBC, it's trying to reach the zone below. Published the zone since December 14th of 2009. They come out Monday morning at 6:15 a.m. Eastern, and once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. The tough part is you have to resist the urge to make it more complicated than that. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. So we've already looked at the daily ES. Obviously, bears are in control. Below the BBC, we have red and falling. Let's go to the 30-minute. All alerts, both the logic and the CTAs, are based on the 30-minute chart. And as you can see, today on the ES, we've gone from zone to zone, zone to zone. I highlighted that this morning in the discussion group, both in the members only discussion group and the trial discussion group. And there were trades, alerts to help you navigate exactly what was happening. We opened last night, we dropped down to the short target. When the market finds support, you see that support was established yesterday afternoon. Price found support, it goes look for resistance. When it finds resistance, it will go look for support. Finds support, it will go look for resistance. When price rallies up to a weekly zone, we expect resistance. There it is there, there it is there. When price drops to a weekly zone, we expect support. And there it is there, and there it is there. only three things happen in a weekly zone. 70% of the time, it's consolidation. 20% of the time, rejection. 10% of the time, the slice. This isn't a slice because it was part of this consolidation right here. But as you can see, price goes from zone, 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 zone. And it's been doing the exact same thing since December 14th of 2009. Once you understand the importance of the zones and what they tell you, like this zone is 44.44/45. This zone is 44.65/66. And again, our members and trial members had these zones Monday morning at 6:15 a.m. Eastern. How much could that improve your trading results? We never had any real reason to look at the long target because we never broke above this weekly zone. Had we broken above this zone, we could have traded up to where we would expect to find resistance at the zone. Or this swing high from yesterday, which was just shy of the zone. Price is unable to reach a zone, that's a sign of weakness. Okay. This bearish cross, where the red line gets below the green line, led to a very extended move. Just as over here, the bullish cross. Blue line gets above the green line, anticipate higher prices, bearish cross, lower prices. Here, we're just pinging back and forth between zones as we await the release of the Fed minutes. On the Dow, we opened right at the zone and consolidated for quite a few hours. We then broke out and ran into this high put in yesterday afternoon. That pushed us back down to the zone below, spiked it a little bit. Then at the 9:30 open, we ran right back up to the zone overhead. And when the euphoria ran out there, back we come to the zone where we are again consolidating. On the Russell, we opened below the BBC, but we had blue and climbing. When it's directly below price, it serves as support. So we ran up to the zone, resistance. We then got below the BBC. We attempted, and then right here, Wall Street open, took us right back to the zone. And when the euphoria ran off, the trend continued. Okay? I typically do absolutely nothing during the first 30 minutes because the market's trying to sort itself out from what happened with all of the stock trading that took place overnight in other countries. Futures trade around the clock, and we have access to them here in the US around the clock, but we have traders around the globe. That's why the logic alerts can come out at 2 a.m. or 2 p.m. whenever opportunity presents itself. So we hit the short target and bounced and hit it again. Now we've traded below it. So the next logical place for the Russell to go would be the weekly zone below at 1876/77. That is the lowest weekly zone for the Russell this week. On the NQ, we opened. Price ran up to the zone and the BBC. That's resistance ×2. And then we got back below. Then we tried to push higher, but we ran into this resistance that was established yesterday afternoon. Get back below the BBC, we make it almost to the target. Now, these are big moves. These are 30-minute candles. Okay? You only need 2 points. This candle closed below the BBC at 15,123. This move down took us about $1,200 per contract traded. With the NQ, you You only need 5 points to get your goal for the price. Comes back up to the weekly zone where it finds resistance. Market finds resistance, it's going to go look for support. And there it found it at the weekly zone. Just like yesterday, resistance, support. Resistance, support. Over and over, again and again, day after day. Crude oil, we've traded through the short target. And Michael's ready to give us a recap of the live training room, so we'll finish this up. We'll still look at gold, silver, and the euro when Michael's done.
All right. Yes, I am back in.
Take it away.
All right, here we go. Here we go. Good afternoon, everyone. Today is Wednesday, the 16th day of August, 2023. Okay. If you have not done a free trial with us and you would like to take a free trial with us, go here to mytradingiq.com, sign up for your free trial right here. Click on this button. It says 9:30 to 11:30 Eastern Time. This week we're actually doing 9:15 to 11:30 Eastern Time, but 9:30 to 11:30 Eastern Time. Click on that, and if you're going to do that, go to trading platforms here and give us the information we need for your trading platform so we can get your desktop up and running for you. Check out the trade rules. These are the rules for all the trades that we take in the room. And you can watch some videos of us applying those rules in real-time markets. They're videos of real-time live markets where we apply those rules, right? All right, the spreadsheet. Now, if you're going to look at the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 16th day of August, 2023. Today made 81 ticks in the NQ, 1 tick in the Russell, 5 ticks in gold, and we didn't trade the ES at all today. Took 22 minutes and 4 trades today to get to the goal for the day. That went up $880. We took a total of 15 trades this morning. So on the year now, that puts us at $4,872 over 11 trading days, averaging $442 per contract per morning session. We've gotten our goal on 151 out of 155 possible days so far this year. And that puts us at $69,014, averaging $457 per contract per morning session on the year, right? So we're 442 on the month, 457 on the year. Now, if you were to quit trading when you get your goal for the day, and you would add 1 contract per month, so far this year we would have only had to work 46.78 hours, and you would have averaged $2,004 per hour for those 46.78 hours. Now, that is not to say that you're going to sit down and work an hour and make $2,000 bucks, but with 8 contracts on so far this month, we have worked about 2.5 hours. Yeah, 2.5 hours roughly. And with 8 contracts on, we're at $12,380 with 8 contracts. Okay, so it can be done. You divide that by 60, so it's just about 2.5. Anyway, let's get into the actual trades. All right, so we started out. We didn't start out with gold. We started out with the Russell today. We had 1 trade on gold right here. We picked up 5 ticks. And we had another one right here. We had a break even. Gold went really flat after that. Okay, after the first, well, after we got started in here, gold went really flat. And there was really nothing to trade here. We do have FOMC minutes coming up here at 2 o'clock. So I think that's having an effect on everything right now, really. During the break here, there was one really nice ribbon trade right here for the gold, and it doesn't have anything right here. For it to have a trade here, the black line would have to get up into the overbought, or price would have to get into the ribbon for it to have any kind of a trade initiation. Right? There's no reason to trade that right now. The Russell, this is where we started our day, and I actually thought we had the goal for the day, but I forgot the Russell is only $5 a tick, not 10. So when I got 11 ticks, I got all excited for no reason at all. All right, now, for anybody that's in here right now, this week we're starting the room at 9:15. I'm starting a live stream in TradingView and starting the room at 9:15. So you are welcome to get in there early if you want to. But right here is where we started out. I think I got a break even on that very first trade on the NQ. Then I got 1 tick over here, I think. No, I got 11 ticks on that one. Sorry, I got 11 ticks on that one. And I had my target at +10, and it gave me 11. And Yeah, I thought I had the goal for the day right there. If it were 10 bucks a tick, we would have, but I thought I did and we didn't. So I didn't trade again until all the way over here. I took the short right in here and that should have worked out for us, but it stopped me out. Then this got really sideways too. Had a whole lot of sideways action in here. There was one more opportunity right here. One more quick shorting opportunity in here that I didn't get. I was not trading any of this one. It got all sideways all through here. Okay. We need to start running again, but this was during the break where it started to make this move down. There were some nice trades in here. We did get a green arrow over here, so you could have taken the black arrows as well. Right? Down here, once you get this first one, you could have taken the second one, but it didn't put in a north swing, so you would have ignored this green one right here. If you were just doing the green arrows, then you would have gotten this and this. Right, and right now you see it's got nothing, but we ended up with just one tick on the NQ. I'm sorry, not NQ, on the Russell. On the ES, we didn't trade anything today, but we'll take a quick look at it. Okay. Hang on just a second here. Take a quick look at this. And yeah, so the ES, I'm sorry, I went right through the whole ES really fast. So we started right in here. It was really choppy right at the beginning. We didn't do anything. Then we got into a trade zone. Didn't do anything. We were waiting for a pullback to the ribbon. We got it and went right through it. Didn't do anything. It was just a mess. Even when we had this green arrow right here, it was just wobbling around. So I didn't want to take that. I wanted to wait till it committed to a trend, and did not commit to a trend with a green arrow until the break right here at noon. Right. And since then, it's had this black arrow, this green arrow, and these arrows. These would be just enough to get a break even, and then you'd have nothing. You're back in a no trade zone. All right, so the markets have been a mess today. You know, if you look at the big picture on this stuff, like Dwayne was just showing you, but if you look at the big picture in here, on the NQ, I was saying this morning, if we're going to get down below this, we're going to get down to the weekly trade zone down below. If we're going to get above, we're going to get up to the zone above, and we did get to the zone above, and then we got back down to the zone below. On the Russell, this is the area right here that I was looking for it to get to because it was such a big expanse in between here. I was looking for it to get down to this midpoint, and it did that during the break. On the NQ, I just showed you that. On the ES, this huge expanse right here, the midpoint of that is right down here, 44.15. That's what I'm thinking it's going to try to get down to if it does start to break down. Now, if you're below the BBC ribbon, and you have a weekly trading zone below you, price is trying to get to that weekly trading zone down below you. All right, right now you can see the ribbon is kind of flat and sideways, but it's trying to get down to this zone down here. We'll see if it does manage to do that. But let's get into all the trades on the NQ. We ended up with no trades at all on the ES this morning. Now, why is this on the ES? This should be an NQ right here. We bump that to an NQ. And NQU, and it should be a 15 range. Okay, and hopefully it's got all my drawings on it from this morning. Hopefully it's got all my drawings on it from this morning. It does, good. Okay, so we'll try to get all the way back to the beginning here. This is going to take a minute to get all the way back to the beginning, but we'll get it. Give me just a minute here. All right, so we started out in the pre-market here with the NQ, and we started out in a no trade zone with the NQ in the pre-market. We got in at 9:15 all the way through to the open, and there was nothing we could do there at the open, and I didn't do anything until over here on the NQ. First trade on the NQ, we picked up one tick. Then the next trade on the NQ, I don't know where it was, but the next trade on the NQ, we picked up just a couple more ticks. Right in here, we picked up a couple more ticks. And then the next trade, all right, there's a couple of trades missing in here, guys. Somewhere in here, we picked up one trade there. Then somewhere we had a +2 in here, and then I stopped out. So we went from 1 to 3 to -17. And then I believe that's when we got over here. Right here, we got a +30 to put us back to +3. Then we had another +30 to put us at 33. Then we had a break even. Missed some trades through here. We had another +30 that put us at 63. And then we missed missed some more trades. Another plus 30 to put us at 93. Then we had a plus 8 that put us at 101. And then we stopped up. That put us back down to 81. And that was what our day was like this morning with the NQ. The NQ was really, the markets weren't very tradable this morning. The NQ was the only thing bouncing around, and even it wasn't given what it normally does. Granted, we got up to 101 ticks at one point, but there were a lot of trades. It just didn't seem like it had the follow through. During the break here, you can see all these green arrows worked out pretty well. Every green arrow worked out pretty well on it. And yeah, and that was it. In here, and that was it, guys. Right now, it's got a long-term direction is bearish. You already had one green arrow right up here, so it doesn't have to actually give a green arrow. It could give a black arrow, and the reason that would happen is if this pulls up into the overbought without price touching the ribbon, and it pulls back out of the overbought without price touching the ribbon. All right, that would give you a black arrow right there. So the long-term direction is bearish, and the bearish direction here is these outer bands, and we're coming off a lower swing. Okay, that's what it looks like. And that's it. That is what our morning was like. So right now it is 12:58. We're going to jump into the live stream here in just a couple of minutes. I don't see any questions. Hang on, maybe I'm not looking right. Put the question box back over here. Spread it out a little bit. No, I don't see any questions in the question box. If anybody has any questions, just type them into the box. All right, I am going to be jumping into the live stream right about now. Okay. All right, so the live stream has begun, and right now what we're looking for, I'm looking for the NQ to pull back up and get this into the overbought down here, the black line right here in the slingshot, into the overbought, or price to get up into the ribbon. Okay, over here on the ES, we need a lower swing. We need to get out of the no trade zone. This blue area right here in the background is a no trade zone. Right on the Russell, it's just going sideways here. We don't really have anything going on there. And on the old, it's just barely put in a lower swing, and it's starting to pull back a little bit. It needs to pull back, hit the ribbon, and give us a down close. You see, it's oversold right here. It's going to be overbought to really give us anything. All right, so on the NQ right now, we are finally back up into the ribbon. If you're in the live stream right now and you have any questions or you want to see anything other than the symbols that we are trading right here in front of you, then type in what symbol you want to see. Right on the NQ, I just took a short right there. You can see the reason I took the short was because it was off the ribbon right here. Now, it looked to me like that was actually in the red right there. I just took 4 ticks profit on it, but it looked to me like that was actually in the red right there. When I gave the down close, I can see right now that it wasn't, but that's why I took 4 ticks profit on that. Okay, so we had a little bit of blue on, a little bit of blue on that one. The Russell is coming out of the no trade zone, but I'm still not going to trade it. You see right here, the long-term direction is completely flat. You want that to give us some sort of direction like this over here. All right. Now we have a green arrow over here on the NQ. I'm not going to take this green arrow because I took this over here and it should have put in a lower swing. So I'm going to leave that alone. All right. And I'm going to wait until it gives us a lower swing and gives us another opportunity, or it changes directions. Okay. So I looked at the larger picture here a few minutes ago. I just want to look at it again for the NQ since that's what we're looking at. We're inside a weekly trading zone here on the NQ. So it would not surprise me if it consolidates right here and then pushes back up to right here. You see this right here? This is called the MA1. This red line right here is the MA1. The way refers to it is red and falling. It would not surprise me if it goes back up to that and finds resistance there. All right, I know it's suggesting short trades right here, but it's going down into the weekly trading zone, which is really not a good idea to trade. So I'd like to see it bounce up and get up to that level that I just showed you. Okay, I don't know how many opportunities we're going to get, but it is right up here. And 53.54 right now. Okay, so it would be right about here. Now I could do this very quickly. Just draw a line up there. We'll see if we end up getting up there. We have no trade here, no trade here, and the gold put in a little bit lower swing. Okay, just a little bit lower swing over there. Okay, so I'm looking in the live stream right now, and nobody's asking any questions in there yet, or wanting to see any other symbols. If you do want to see any of the symbols, you just go to this now. Okay. For everybody that's in the live stream, I just wanted to let you know we are doing another thing this week. We're trading the open at 9:15 a.m. If you want to watch that live stream, you just go to community live streams, go to upcoming streams. This isn't in there right now, but it will be. This is the one we did this morning. It's in recent streams. If you want to check that out, it's right here. But if you want to, from 9:15 to 9:45 in the morning, we're gonna do the open this week. Right? If you want to check that out, you can go watch that. If you want to register for it for tomorrow, I'll make another one of these. It'll be there tomorrow morning. It'll begin at 9:15. Okay. Back here for right now. Still no trades. Gold is going down. Now let's see where gold is going. Okay. Let's take a look at that. Now we looked at gold a lot this morning. This is the midpoint right here. This morning that I had drawn that in this morning, and I said we got a huge expanse between these two weekly trading zones, and the midpoint, if it's going to go down, should probably get there. One of the things that you will come to know over time, if price is below the BBC ribbon, it is trying to get to the weekly trading zone down below it. All right, so this is ultimately where it wants to go to. It'll probably pull back up, test the MA1 right here at some point. But right now, it's got a long way to go on the downside. So if we had another short in here, no, I wouldn't hesitate to take it. Okay, look at this on a little bit bigger picture. Spread it out. Got on a little bit bigger picture. Looking left, there were buyers down here at 27.5 yesterday. Okay, when the news came out in the morning. So 27.5. That's not that far down. It's like 25 points down, or 25 ticks down. So it's not that big of a deal to get there. If you had a pullback, you could consider that. But we don't have anything. Does anybody want to see anything? Any kind of equity or ETF, Forex, anything like that? Sometimes, like yesterday, I think EU or USD. EU or USD was one of the things that I wanted to look at yesterday. And you know, in the you're in a huge no trade zone here because we got to adjust the sensitivity for the market. Now we also have to adjust the time frame. You're not going to do a 7-tick range on this. You probably do. I think we looked at a 25 range yesterday. I think 25. Yeah, there you go. Now we'll just adjust the sensitivity to take into account the number of decimal places that we have. Put that many decimal places, I'm guessing. That's about right. Okay, so you see in here, you get the same things. And this is with the EUR-USD. This is Forex. Look for price to pull up and bounce off the ribbon. Long-term direction is bearish. Price pulls up, gets the lead line into the overbought. You bounce off of that. Do it again right there. You did it over here. Did it over here and here. This one didn't work out so well, but this one didn't put in a higher swing. Okay, this one worked out okay, enough to just stop to break even. Didn't put in a higher swing. Change directions. It's really not that hard to do. Okay, it's really not that hard to do. Okay, so the NQ is starting to move, the S is starting to move. I'm going to put this back on the Russell. Okay, that's probably starting to move too. We have at 2 o'clock, we have the FOMC meeting minutes, and that's a high impact news event. Okay, so you're going to want to check that out. Let's see. We didn't pull back enough to get it into the overbought or to test the ribbon here. This is on a 25 range. Let's go back to a 7 range and see what we got. Same thing. The things that's closest to a trade setup right now is probably the NQ. All right, we stayed in the same direction here. We're still bearish, so we don't need to pull all the way back up and hit the ribbon. You know, if it pulls back into the overbought and gives us a down close without hitting the ribbon, we'll get a black arrow. And we'll be able to take that right now. I don't know why we had to suddenly move down on everything. But again, if you go in here, we want to get on the NQ. We want to get below the weekly trading zone, which I think we just did, right? Yep, we just got below the weekly trading zone. So now the next level down on the NQ would be the midpoint between these two weekly trading zones. All right, so that's what I'd be looking for right now. The midpoint is going to be right here at 64 on the downside. Right, we don't have a trade set up for it yet, but on the downside, this is what I'd be looking for. Okay, just double click that. There you go. All right. Does anybody have any questions? Anybody want to see any other symbol? Did I put everything back to normal on this? I don't know that I did. No, I did not. Okay. Here we are. We're waiting right now. We're in the overbought right here. So if you get a down close out of the, it pulls it out of the overbought right there, it's going to give us that black arrow. That black arrow is a valid trade right here. It's going into the low of the day. It needs to go 8 ticks into profit to get the stop to break even. This is the low of the day right here, and it looks like it wants to test that. Now this is on a 15 tick range on the NQ, so the stop goes to break even after 8 ticks in profit, and there it is. And I'm going to lock in. Where am I at? 0.50. Okay, right there. That's 12 ticks, and it just gave me 30 ticks in profit right there. 30 ticks in profit. Okay, I had a 30 tick target on that. And that's it. That's the trade setup again and again and again. That's all you have to do. And what was that number that I said I thought I was going to get down to? Right down here, right? We're getting a pullback. We're going to have another shot at it right now. That's what we're looking for. This has to get up into the overbought, or this has to get up into the ribbon, or both. Both is better, but I don't think it's going to work out this time. See, for it to do both, it would have to get a higher swing than this prior swing high. So that's not ideal right now. So another black arrow right now would be okay to trade, I think. We're on the gold. We need to get a pullback over there to the ribbon or into the overbought. We didn't get either one of those. The same thing on the Russell. All right, the ES has come out of the no trade zone, so we have an opportunity there, a potential opportunity coming up there. Okay. That's it. We're looking right now, looking and waiting. And we have nothing. We just have to wait. We have to wait for a pullback. All right. I know the NQ wants to keep going down right here, and I know that this is the level that it wants to get down to. But we need to get a pullback a little bit deeper than that. We need another up close. Up close here is going to get that into the overbought. Okay, there it is into the overbought. Now we need the down close. 96.50 down to 91.50. All right. The entry point is going to be 4 points below the top of the bar. 4 points below the top of the bar. Okay, there it is, and there it is, and here it is. And it gave me a little bit of slippage on that. Now I got to get 8 ticks in profit to bump the stop to break even. I have a 20 tick stop on this trade. Right? And it's possible that it's going to pull all the way back up and hit the ribbon. But hoping for a push down right here. Second push down with the black arrow. Okay. We need 8 ticks in profit, so it's going to get down to right here for me to get the stop to break even. Okay, right here. Now it hasn't done it yet. Still has a chance to run up and hit the ribbon and stop me out, but we're going to wait for this thing to do what it's supposed to do. Right here's where it needs to go. Okay, if it stops me out, it stops me out. Nobody likes being stuffed out, but it happens. It's part of the process. All right, the other markets are, oh, I was holding it there for trying to drag it down, make it go down, willing it down. The other markets are, well, they kind of need to pull back too. If the other markets start to pull back, the NQ is probably going to pull back with them. But I'm going to get ready for the break even right here. Right? If it's going to push down right now is when it's going to do it, I think. Now it's coming up. Oh, come on. Thought it was going to nail it right there. Thought that was the one. Nope, it didn't. All right, so it stopped me out. Minus 26 on that one. That's okay. We got the 30 over here, and we got minus 20 there, so we're plus 10 overall. These other markets need to pull back up and get into the ribbon or get into the overbought. Right, that's what we're waiting for there. Anybody that's watching in the live stream, if you have any questions, just type them in. If you haven't taken a free trial with us, if you like what you see and you haven't taken a free trial with us, go here to mytradingiq.com. Right here is where you sign up for the free trial. Right, 9:30 to 11:30 every business day. Right? And in the free trial, if you want to see what the free trial is like, you can go to mytradingiq.com and go to videos. Watch some of these videos, and you'll see what it's like in the room in the morning. You could also go to your TradingView live streams, look at recent streams, and click on this. All right, that was today's room. This is what it looks like if you want to watch a thing in the morning, 9:15 to 9:45. But to take the free trial, which is really what you want to do, just go to the homepage, cfn.net, and click on that. Okay. Right, back here. So it did pull all the way back up and test the ribbon, and now it's into a no trade zone. These other markets here, they are not giving us anything yet. The ES right now is just about into the overbought, so it's almost got a trade set up there, and the Russell is getting up toward the overbought, so it's almost got a trade set up, but it doesn't have anything right now. The gold is in the overbought. If you got a down close, you got to drag this out of the overbought. Then you would have a black arrow and a short trade. 29.9 down to 29.1 is what you'd be selling there on the gold. Okay, 29.9 down to 29.1. Okay. All right, so now you got 30.1. Subtract 8 from that. Be 29.3 is what you'd be selling. This is the way it looks on the top. All right, it's the stop limit 8 ticks below the high of this bar. Now on the ES, the sell stop limit 8 ticks below the high of this bar would be 33.25. 33.25. That is the low of the day, which is right here. Okay. Nothing on the Russell, nothing on the NQ. Those are the only trades we have setting up right now. Jill, I gotta remember to send you that link. All right. So we closed up, not down here on the ES. So that'll be 37 minus 2 points, 37 down to 35. Now 37.50 down to 35.50. 37.75 down to 35.75. Now the assumption here is that it's going to pull it out of the overbought on a down close. That would go as a black arrow. Right over here on the gold, we are now, the swing high is at 30.1, so that is in the right place for the gold. And on ES, the swing high is 37.75, so that is in the right place. Right, we just triggered into this. No, it did not bring it out of the overbought. So this is not actually a valid trade right here. So I am gonna probably get out of it right here again. Okay, when I get a chance to, I will. All right, so over here we have 30.1. 30.1 is the high on this, right? I should have just taken a tick stop on that. The NQ has a green arrow here, but we don't have any long-term direction, so that's not a valid trade right there. Okay, I would not do that trade. You give a green arrow, but it's not looking far enough back at the long-term direction, or it's looking too far back, I guess, at the long-term direction. Okay. Now, the gold actually gave the down close right there, and it did pull it out of the overbought. It should have given us a black arrow. I must have something set wrong on the gold, because that should have given us a black arrow right there. But we're short the gold right now. We're going to be short the ES. This is going to turn into a valid trade here in a second, I think. I should have gotten out of it already, and I'm still going to get out of it when I can. There, we're flat on this trade. So now I want to wait for the actual valid trade here. It's going to be 36.75 down to 34.75. Okay. I know that doesn't seem right to you that I just got out and got right back in, but I was waiting for this to pull out of the overbought. Now this is the valid trade right here. Okay, that last trade was not a valid trade. That was a mistake. This is the one I should have gotten into. And this one right here is the one I should have gotten into. This should have given us a black arrow right here. I must have something set off on that. Let me check. No, that is correct, but I have green only. Do I have everything on down here? Yes, I do. That's weird. Anyway, so we're short the gold and we're short the ES right now. Nothing over here on the NQ right now. Nothing, I guess the Russell, we could have done the Russell too, I guess. All right, now, again, we are waiting right now for FOMC minutes to be coming out here pretty soon. All right, here is the Russell one. We're short all three of these markets right now. And we need 4 ticks in profit. This should be at 10 ticks. This should be at 10 ticks. And this should be at 10 ticks. Okay, this is at 10. That's a 10, and that's now 10. 10 ticks risk. All right. Now the stop goes to break even after 4 ticks in profit. We haven't had that on any of these yet, but kind of waiting right here. The FOMC minutes that are coming out to high impact news event comes out at 2 o'clock. I usually wouldn't trade right now because of that, but we have a chance to get in here and do something for you guys, so we will. So 4 ticks needs to go one more. There it is. That stop goes to break even. And I'm hoping the Russell's the first one of the bunch that's going down. Hopefully they're all going to go down right now. The Russell, we're out of break even. The Russell, we're out of break even. Put that down back where it goes. The ES and the gold, we're still waiting. We need 4 ticks in profit to bump the stop to break even. It's going to get down here and down here. Okay. Yeah, we're going to stop out on the ES. It's going to go up and test the zone. I mean, the band. The band. The ribbon. The band. The ribbon. That's what I mean. All right. So have a good morning. This morning we ended with the Russell. We're just plus 1 tick on the Russell, plus 81 on the NQ, plus 5 on gold. Didn't have any trades on the ES this morning. It was kind of a weird morning in that regard. Look at the ES. You know, all this no trade zone this morning during the morning session. It's just no opportunity in here. During the break, we had a nice green arrow right here. That was pretty much it. This one here that just stopped us out. That was pretty much it for the ES today. It's been really quiet. What do we have for news tomorrow? Thursday, unemployment claims coming out 8:30. Philly Fed coming out at 8:30. So unemployment claims is the high impact. That's tomorrow. And Friday we have nothing. All right. So we'll see what the day brings tomorrow. I'm sure there'll be something to do in there. All right. Does anybody have any questions about anything? The NQ is starting to run right here. See the long-term duration, the outer bands right here, they're starting to spread out. I'd like to see you get a little bit higher before it pulls back. We'll take what we can get with that. Right, over here on the Russell now, we took this trade here. We took this trade here and it didn't put it in a lower swing, so I'm not going to take the green arrow right here. If you were just trading the green arrows, then this one right here should move down to this level, down here, 85.8. There is a setting in here, so we only have green arrows. If you go in here and you go to inputs, do green only. You only get the green arrows to trade. So if that's what you're doing, then you have a green arrow trade right here that should make it all the way down here to 85.8. Okay. All you guys are out there that are watching along with us. All right. The ES right now on the ES, again, we're going back to the green arrow thing. If you didn't do the black arrow right here and you're just waiting for the green arrow, a down close of this bar, if it drags it out of the overbought right here, drops out of the overbought, is going to give a green arrow here. And that should go down to the prior swing low as well. Okay. So I don't see any questions being typed in anywhere in either of the chat boxes. If any of you guys want to get in here and ask a question, you want me to look at anything, you just got to type in a symbol. Could be an ETF, Forex, crypto, stock. All right, we need this to get down to here. I'm not going to take another trade on this, but if you know, because the rule is if you take a trade, it's got to continue the trend with that trade. All right, I took the trade and it stopped me out. Did not continue the trend. So I can't take another one until it does in that direction. All right. On the NQ, we're pulling back down to test the ribbon here, and we're oversold, so we could have another trade here on the NQ. Right, the gold is starting to move a little bit. Needs to get 4 ticks in profit to bump that stop to break even. We got the green arrow here on the ES. So if you took the green arrow here, if you only did the green arrows, you took the green arrow here on the Russell, you stop it to be a break even. If you took the green arrow here on the ES, you would be in it right now. There's no green arrow here on the NQ because we didn't pull out of the oversold. Right? It is a valid ribbon trade in there. Okay, it is a valid ribbon trade, but there's no green arrow because we should pull out the oversold. So I'm going to bump in 4 ticks in profit right there, and we'll see where it goes. Okay, it just took me out with 4 ticks in profit. Okay, now we've got the black arrow on this one because it did come out of the oversold on that one, but I was already in and out. The gold, we want to see this move down. Probably going to move down to right here, right, 28.2. Now I have a 30-tick target on this. If I drag it all the way up to here, then that would give us 9 ticks in profit on the gold right now. We need that to go 4 ticks in profit to get the stop to break even. Okay. Over here on the NQ, we did put in a higher swing after we got that black arrow there. We took a little bit of profit on that trade. Over here on the ES, it's still pushing down. Russell should have just stopped at break even, but out of that, this didn't go far enough to get the stop to break even. This on gold right now, we are going to bump that stop to break even, and it's 128. I don't know if we're going to get another trade here. We might get one on the NQ right now. We might get one here on the NQ, then I'll close there. It might pull it out of the oversold and give us a trade. We'll see. But on the gold, look at the gold right here. The gold wants to go a little bit further down and go down to 28.0. So if we got that, that'd be 11 ticks. 11 ticks, and there's the NQ trade. The NQ's got the green arrow because it came out of the oversold right here. It came off the ribbon and came out of the oversold. All right, so you got the ES and the Russell here just going kind of sideways, both with green arrows on the short side. The Russell gave enough to get the stop to break even, maybe take a little profit. The ES has not done that yet. The NQ, we've had a couple of wins and a couple of small wins on that. We had one stop out here on the ES, and the gold is now starting to move. We're going to lock in 4 ticks there on the gold. This is where I think it wants to go down to, right here at 28.0. So if it hits that, we will have 11 ticks or $880 in profit there on the gold. Okay, that's what I'm looking for over there right now. I don't see any questions popping in anywhere right now from anybody that's watching anywhere. So if you have any questions, we're running out of time here. We've got like 30 seconds left. So the gold, again, let's look at the bigger picture on the gold and see what that's trying to get to. Okay. The bigger picture on gold is right here. It's trying to get all the way down here to 1921. All right, I'm just going to lock in a little bit more in profit on this. That's 6. Let's see. That is the lowest weekly zone for the week on gold. For those of you guys that are in the live stream, you can hear Dwayne say that. It's the lowest weekly zone for the week on gold, so that is a significant thing. And we just hit my profit target there. No, it came back up and hit my stop. Okay, so that's all good. Everything there worked out the way that we kind of wanted it to. It would have been better if we had my profit target instead of my stop. But actually, no, it did hit my, I don't know, it hit one of them. Hang on. Yeah, it hit the trailing stop is what it hit. Okay, well, guys, it is time for me to wrap this up. The ES is now in a position where you could bump your stop to break even. Right, the Russell was there a few minutes ago. We want to see that go down, put in a lower swing. This go down, put in a lower swing. This just did put in a lower swing, and this is going sideways again, into a no trade zone. Okay, so we're gonna wrap it up. Tried the 9. You tried the 9 there on that one. On the gold. Okay, that's good. All right. That is it, guys. With that, I'm going to wrap it up, and we'll head back out to fabulous Phoenix, Arizona, in Studio A overlooking South Mountain, America's largest city park, because I have another meeting coming up here in 14 minutes. All right, so Dwayne, live stream is ending now. Again, if you guys are in a live stream, if you haven't taken a free trial, go here to mytradingview.com. Click right there for the free trial. All right, that's it.
Recap of the morning session.
Today, 22 minutes, 4 trades, $880.
Good job.
Thank you. Thank you.
All right, guys, here's where we left off on crude. Okay. We opened last night right here. And it was 20 minutes into the session that the targets came out. This is crude. You only need 10 ticks to get your goal for the day. So we made it almost to the short target. And into this support level right here, just above the target. Just back above the BVC, so we got a leg, got a retracement, pull back holes more often than not. There wasn't enough buying enthusiasm to push us all the way up to the zone. So when that happens, when buyers stop buying, it takes financial commitment for price to rise. In order for price to fall, all it requires is that institutional buyers hit the pause button, as they did. And when they do, this is what happens. Balloon climbing turns to red and falling. Price pulls up to the BBC, the pullback holds. Down we go. And right here is the lowest weekly trading zone for the week on crude. Gold sitting right on top of the short target. And notice price ran up to the weekly zone, which we expect to be resistance, as it was yesterday and Monday. The zones come out Monday morning at 6:15 a.m. Eastern. Once they come out, they don't change for the entire week. Price drops to a zone, we expect support. When it rallies up to a zone, we expect resistance. Rallies up to a zone, resistance. As long as price stays below the BBC, it's trying to not only get to the short target, which it has done, but also trying to get to the zone below. This is the lowest weekly zone this week, 1920/21. Silver opened, got above the BBC, got above the zone, red and falling, turned to blue and climbing, and off we go. It only takes 2 pennies in silver to get your goal for the day. Candle here. It opened at 22.65 and ran up 3 pennies. That's $150 per contract traded. You've earned the right to trade 10 contracts. That's $1,500. When the market finds resistance, which was defined yesterday afternoon, as you can see here, pull back to the BBC and the zone. That's support times 2. As the pullback to the BBC holds more often than not, and when price drops to a zone, we expect support. Moving otherwise. So off we go again to the target. Zone, full consolidation, and then we came just shy of hitting the zone. Lots of room on the way up. Remember, it only takes 2 pennies. This move here was from, well, even just this candle here. It's obvious price is trying to get to the zone overhead. This candle opened at 79, ran to 85. It's $300 per contract traded. Candle. 10 contract trader, it's $3,000. So you don't start trading 10 contracts right away. In fact, you don't start trading live right away. Come to us because you want to learn how to trade. So you got to follow the 24/20 blueprint. Together 10 consecutive days in a row in your demo account where you reach your goal, 10 trades or less. Once you accomplish that, the blueprint will give you the green light to go live with 1 contract. Once you're trading real money, your goal is to increase your account balance by $2,000. Once you do that, Blueprint will give you the green light to add a second contract. Now, the difference between the first and second contract is huge because the first contract is funded with your startup capital. Your second contract is funded with profit you earned in the market. Blueprint will tell you when it's time to add contract number 3, number 4, number 5, number 10, all the way up to number 20. By then, you should have the hang of it. But you only add one at a time when it's time, and you only add with profit earned in the market. If you have the discipline to follow that, it makes it very difficult to blow up another account. Not impossible, but you will break some rules along the way. Blueprint also helps you write your business plan and your trading plan. 9 out of 10 new traders don't even know they need a business plan or a trading plan. All they need is that shiny set of whatever they just bought off the internet for 99 bucks, and it's going to change their life forever. The only way you're going to learn how to trade is to find someone who's willing to teach you how to trade. Period. Good news is once you learn how to trade, nobody can ever take that away from you. Just like once you learn how to read, nobody can ever take that away from you. And learning how to trade is simply a matter of learning how to read the chart, interpret what it's telling you. Read it like a newspaper or a great mystery novel. Doesn't happen overnight. No get-rich-quick scheme. It's a job like any other job. But as with any other job, you need someone to teach you how to do the job. Euro. We opened right at a zone, consolidated, ran to the target, ran to the zone. Got below the BBC, dropped to the zone, found support, bounced back up to the BBC. The pullback held because it holds more often than it doesn't. And then we dropped to the short target. So either direction, long or short. And again, all members and trial members had all these targets and all the logic alerts at 6:20 p.m. Eastern last night. Take one last look at the daily. Hey, we're just off the low of the session. And we have extremely high impact news coming out in 21 minutes. It's the Fed minutes. Got the Fed announcement a couple weeks ago. So that's already baked into the market. But today, we supposedly get to hear what was said behind closed doors and how they arrived at their decision and what their plans are for the future. So take all that with a grain of salt. But the market will react potentially violently, up, down, or both. So the best thing a smart trader can do, sit back, watch the fireworks, and when the market resumes its normal rhythm, and this is the rhythm, leg retrace, leg retrace, leg retrace, leg retrace, and then price gets below the BBC, leg, or retrace, leg, retrace, leg. Whether you're moving up or moving down, that's how price moves. Whether you're on a daily chart, a 30-minute chart, a 5-minute chart, or a range chart. To learn how to trade, get your lifetime passport with no recurring fees, no upsells, no nonsense, not ever. Go to eminifuturestrading.com. If you have questions, call 949-42-EMINI or send an email to support@cfrn.net. The reason 9 out of 10 new traders fail is because they don't have anyone to teach them how to trade. They buy books, they watch videos. Got nothing against books, got nothing against videos. We have over 2,300 videos on our YouTube channel. But books and videos are not a replacement for hands-on live instruction. Passport holders have unlimited access to one-on-one private mentoring. That's on top of the live training room every day for 2 hours. Unlimited one-on-one private mentoring. Strategy you learn, the indicators that you own for life as a passport holder are fluid across all markets and all time frames. This price flows the same across all markets and all time frames. As a passport holder, you'll receive the Logic 247 alerts around the clock. You'll receive the Concierge Trade Alert report every evening when it's published. You'll receive an invitation to the Thursday night members only workshop. And you will have around-the-clock support via our many Telegram channels. particular Telegram discussion channel. We got a channel for everything. We got a channel for the zones. We got a channel for the workshop videos. We got a channel for discussion. We got a channel for the logical, a channel for the CTAs. As a passport holder, it's your all access pass to everything we do, everything we've ever done, and whatever we do in the future. And it's all one mouse click away. Actually, 2 mouse clicks. EminiFuturesTrading.com. Sadly, some in the audience today have lost more money than what it costs to become a lifetime member. Trading can be a very lonely business, but we have a vibrant community, so you don't ever have to trade alone again. But if you're going to succeed, you're going to have to find someone who's willing to teach you how to trade. And once you learn, nobody can take it away from you. Let's wrap it up with our good word for the day. CTA Ronnie, what does CTA stand for? Well, if you were ever been on Telegram, it stands for Concierge Trade Alerts. You should visit the channels that you have access to. It will help you a lot. All right, good word for the day. All things are possible to him who believes. Mark 9:23. It's about becoming a no-limit person. No-limit people refuse to accept things as they are because they see them as they can be. Instead of saying it can't be done, they rise up in faith and say, all things are possible to him who believes. No limits people have faults and failures like everybody else. The difference is they walk by faith to the cliff's edge, knowing that one of 2 things will happen when they get there. Either God will put solid rock under their feet, or he'll teach them how to fly. In other words, they plug into God's unlimited power supply. The author of the book of Hebrews describes no limits people like this. Hebrews 11:33. Who through faith conquered kingdoms, administered justice, and gained what was promised. Who shut the mouth of lions, quenched the fury of the flames, and escaped the edge of the sword. Whose weaknesses were turned to strength, and who became powerful in battle. Now notice these people started out weak. They became strong. How? Through faith. They possess the kind of faith that disregards the odds, the obstacles, and the opposition, and declares, I am what God says I am. I have what God says I have. There's a story of an old foreman who worked hard on the job and expected the same from his workers. One day, one of them said, don't you know Rome wasn't built in a day? Smiling, he replied, aye, but I wasn't the foreman on that job. So today, ask God to help you rise above your fears and make you a no-limits person. That's our good word today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.